Everybody wants to buy a property. Everybody wants to own a piece of real estate, whether it be for themselves and their loved ones, a place for them to live in as a family, or for rental purposes. But unfortunately, because of their low credit scores, some people cannot qualify to buy their properties. In this short video, I'm going to spark something in your mind that gets you thinking about this strategy that you can use to actually buy a property with a low credit score. Hello guys, welcome back to my channel. If this is your first time on the channel, make sure you hit the subscribe button and the bell. Make sure you also hit the like button so we rank the video higher for other people to see it sooner. So, what is this strategy that I want to discuss with you today? This is the installment sale. So what is the installment sale? The installment sale is an agreement or a contract between a buyer and a seller in which the buyer pays installments every month to the owner of the property or the seller in this case. Now, this thing must be done professionally. There must be attorneys involved. There must be lawyers involved for it to be safe for the buyer and also safe for the seller. Now, how does this whole installment sale work? An installment sale works for both a buyer and a seller. Now, these are people that are motivated, the seller being motivated to sell and the buyer being motivated to buy. Now, let's look at the seller, for instance. This is somebody who wants to relocate to another province. This is somebody who wants to relocate to another country, or this is actually somebody that has seen another property that they love. It's much bigger, it's much better, it's much more beautiful than the one that they are moving out of. Now, all they need to go into the other property or to relocate or to do whatever they want to do, they need a down payment. They need a deposit for this particular property that they own. As a buyer, this is where you then become a lifesaver for the seller. But the seller becomes a lifesaver to you as well, because you've been knocking on doors at the banks asking for your home loan, but because of your low credit score, they've been declining your application. But now here is a good Samaritan that is willing to sell their property to you, in which you are going to pay installments on a monthly basis. But because you can't qualify for a home loan, does that mean you actually cannot afford to pay monthly installments? That's not true. So the reason you are not qualifying for your home loan is because of the criteria they use, in which they look at how you conduct yourself on a monthly basis when you have to pay your debts. So now here is a seller. The way they are going to scrutinize your affordability is not as strict as this criteria they use at the banks. Here's what you are going to need for this deal. You are going to need a deposit, a down payment, an amount that is going to be helpful to the seller to go and do whatever they want to do. But here's what you are not going to do. You are not going to pay a deposit directly into the seller's bank account. That is not safe for you. It's not safe for the seller. So you are going to do the process as smooth as it should be done, as it is always done when a property is being bought. As much as this is an installment sale where you are going to pay on a monthly basis to the seller, but you are not going to begin the process by just depositing money into their bank account. Now, here is the process of how an installment sale is done legally and professionally. A buyer and a seller meet through any means. It could be through After 12 Properties. Just let us know if you want to sell your property. They start discussing the potential buyer's affordability and checking how the buyer is going to pay for the property. This is more lenient than the criteria the banks are using. The buyer and the seller agree on a purchase price and the payment terms. They then get a lawyer to draft the installment sale agreement. The buyer and the seller, they then sign the agreement. The buyer pays a deposit into the attorney's trust account. The attorneys lodge the contract to the deeds office. The contract is recorded against the title deed of the property. This protects both the buyer and the seller. But the seller remains on the title deed of the property as the owner until the buyer has paid it off. And then, on agreed date, the seller gives the buyer occupation of the property. At this stage, the buyer can actually take any decisions relating to the property. But what's key is that the buyer must then do every due diligence to ensure that there's no lien against the property doesn't owe any municipal rates, doesn't owe electricity, or must check every single thing regarding the property, because now it is on your hands and you must ensure that every due diligence is actually done. Now, if you want to have tenants move in, you can actually get tenants moving in. If you want to start making any alterations in the property to boost it so that it is actually costed higher or it's evaluated higher for you to actually even sell the property, you can start working on that to ensure that the property is as per what you envision for the property to be. And then the attorneys will then pay the buyer's deposit into the seller's bank account. The buyer then starts making the monthly installments to the seller. This can be done over a period of a year, 2, 3, 5, or even 10 years, depending on the agreement that they have. The buyer in this case is very motivated to pay their installment because this is their home, or rather a place of business for them. They don't want to lose the money they've already invested into the property. They have the right mindset of an owner. They know that this is now their home. If the seller still owes the bank for the property, they continue to pay the bond. They will use the buyer's monthly installments to do so. The buyer, as the custodian of the property, will pay for rates, levies, insurance, maintenance, repairs, and all municipal services. Only where applicable, a balloon payment is then paid as the last installment. It can be done cash or via a bond that the buyer can take at the end of the term. Probably by this time, the buyer's credit score will have improved drastically. So if the buyer takes a bond, it might be easier at this time because it is likely that over the years, the property value would have increased and the buyer's income would have risen. The buyer would have paid down some of the capital and the buyer would have had the opportunity to make additional savings. And the buyer would have a proven track record of meeting their payment obligations. The last payment to the seller means the property is fully settled, fully paid. Conveyancing attorneys can now transfer the property to the buyer. The buyer is now the owner of the property. Halala. In previous videos, I said to you, it is not always about the ownership of a property. It is more about the control of the property. The ownership, we'll see that one later. For now, it's time to make money in real estate. Thank you very much, guys, for watching. I hope this video was very helpful for you to understand that you can actually buy a property even if your credit score is a bit lower. All you need to do is go out there, find the deal. Do not be going out there looking for the money. Go out there looking for a great deal to invest in. Thank you very much for watching. Please do join us once again in the next video that we're going to be sharing with you. For now, please do hit the subscribe button and the like button. And cheers.